You guys are going to ask, can we get access to this Notion? No, you can't. We thought many, many different ways. How can we get this to people? And there's just no secure way for us to do it. So we landed on this is just our in-house procedure for having everything, but then we screenshot and update things into the Discord and into the course. So as much as we'd love to be able to give this to you, we can't. So um, anyway, so Smog, if you guys understand Smog, just taking a look at this image, you get, actually, I'm going to look at this image over here because it is better. Okay, so taking a look at Smog, you see price is trending, and then we get a change of character with a highlight here. Here's the OG highlight that you guys are going to see. We have ADX below 25. We have a fair value gap. Price retraces up into it, and we are looking for a reversal to continue down, right? And so that's a short example of Smog. We have a long example. Price is trending downward. We get an OG highlight. We get a change of character to the upside with a fair value gap, and then we look to get in on the reversal to the move up. Okay, so now the question is, what if we miss this reversal entry and it continues to trend? How can we know that we want to, and if we want to get into the trend? Well, what we started noticing, some of you guys who traded the original OG or have traded Smog, you'll realize that there's times where we get a OG highlight here. Okay, we have this OG highlight right here, and then we get a loss. Price continues to push up, right? We get an OG highlight here, and then we would get a loss. Price would continue to push up, and it happens time and time again. So the question was, well, how can we figure out the best way to mitigate those losses, and even better, how can we take the opposite position? Because if we can narrow in on something that tells us, okay, this is the parameter for taking a reversal, and if it's not there, then it would, on the opposite side, be a parameter for taking a continuation. At least that's how my brain works, right? So I'm like, okay, so if we're not going to take the reversal, then we're going to take the continuation. What kind of criteria do we need to have to make that happen? And this is actually interesting. I don't think I've shared this yet, but Craig, this is a nice thing maybe to talk about with the community, maybe on YouTube as well, is how did I come up with ADX? I actually took, Craig and I, we took all the data of Smog and all the different ways of creating the continuation strategy, which, by the way, G2 is named G2 because of all the variations we did. A, B, C, D, E, F, G. There was actually an H. So I had 8 variations of a continuation strategy with multiple different take profit methods. So this was G, number 7, 2 with the second take profit. So that's why we named it that. And so what I did actually was before we finally released Smog, and eventually landed on G2, I was typing, actually went to AI, went to ChatGPT, and I started sharing the details about my journey on creating Smog in G2, what ultimately became Smog in G2. And I asked it, I said, give me as many criteria and as many things that are out there that I don't know about that people use for momentum and trend trading that could help me identify whether or not I want to take a continuation or a reversal. And what's interesting is it gave me a list of 9 things, and I tested all 9 of them. And ADX was the clear winner when we looked at taking ADX with the 25 line value and the 1 minute and the 5 minute, which that was actually my idea. But I learned about ADX from AI. So I guess you could say the strategy is kind of birthed with AI in some capacity, which is kind of nice. And so that's kind of the history about how ADX came into the picture. Because I know some of you guys are like, where did this come from, right? That's actually the story behind it. Because what I wanted to do is I wanted to see if we have a metric that can help us identify reversal or continuation within the framework of our strategy, then that could be the pivot point for whether or not we want to take a reversal or a continuation. And that's why with ADX, if ADX is below 25 and we see the OG highlight and we get the change of character in the fair value gap, then we want to go ahead and take that trade, right? But then what's interesting is you start to see like, okay, what if there's this highlight and we want to get into the continuation? So let's start breaking into the G2 rules now, right? And start to show you guys that. Okay, so G2, continuation trend following the OG indicator. Okay, so essentially think about this. With the OG highlight, okay, what's the one I want? I want this one here. With the OG highlight, think of that OG highlight now as a max pullback, because you're going to see on a lot of charts when it's trending, we get the highlight and then it continues. And so I started looking at it in terms of what if this was like a pullback? And Craig and I started looking at the different ways that we could get into a trade. Sorry that it's doing that. Okay. And so here's what it is we're looking for. We're looking for trending price action like we already have. We're looking for a fair value gap in the direction of the trend, price to come into that fair value gap be respected, which means we don't get a close beyond it. We don't close through the fair value gap. And then we want a candle close in the direction of the trend, indicating that we could be continuing up. With the OG highlight and with ADX above I know with Smog, we talk about 25. 25 is good. Also, you could do above 20 if this is happening the way we want it, according to the data that we found. So, so this is it. This is what we're looking for, right? If I go up here to the rules, I don't know why that image is so big compared to everything, but here's what we're looking for. So ADX, 1 minute above 25, or you could do 20. You're going to get a few more trades, and win rate is about the same. Price is trending. The trade setup, we're looking for a pullback signal. What is that? That's the OG highlight in a trending situation. We're looking for a price respecting the fair value gap. It reacts and has a close in direction of the trend. We enter at the candle close. We actually market order into this trade. We put the stop loss beyond the swing of the fair value gap, as you can see here. Okay. We move stop loss to break even when price comes up to break of structure. And then we trail it. How do we take profit? We trail it the same way. We could trail it the same way. The same way as what? The same way as Smog. Okay, so we start looking at some charts here and actual examples. You'll start to see what I mean here, right? So, okay, I know this is kind of big. And we'll hit the actual chart after this. I just want to show you guys this. I don't know why it's so big. Okay, so here's an example. Holy crap. Craig, do you know what's going on here? Why this is doing this?
What is it? It's taking up the whole screen now.
The whole screen, yeah.
Just flip out of the thing and just come back to it and see.
Like get out of it and go back into it.
Yeah. Or it's like open up a new Notion page and just.
It's so weird. It's so massive.
Oh yeah, can you hit that? Pull that.
I'll just make it smaller. Yeah, sorry about that. I've never seen it like this big. I don't know why it's doing that. All right.
Have you ever had it full screen before, like full width? On your
Yeah.
computer? Oh, you have?
Yeah, maybe not this one. All right. Here we go. That's good. You guys can see that. Okay. So you can see here price is trending. We got an uptrend here. Price is trending. We're printing fair value gaps. Okay. We get an OG highlight. Price comes into the fair value gap. Then we get there's no candle close beyond this fair value gap. It's being respected. And then literally we're looking for the first continuation candle after this OG highlight. Okay. First continuation candle after this OG highlight, meaning a candle closing in the direction of the trend after it came into the fair value gap. So price trending, fair value gap, price comes into the fair value gap. There's an OG highlight at some point indicating what we could call a max pullback in the trend. We look for a continuation candle close. We get in with stop under the low that was in that fair value gap, which in this case was actually this wick right here. If this wick wasn't here, we would get stop loss under this candle. ADX above 20, that's what we need. We get in the trade, break of structure, move stop to break even, start to trail this like we normally would. This candle printed a fair value gap, stop loss under there, and this is like a 6R trade. Okay, we'll look at the short example, then we'll just keep looking at more trades so you guys can understand this and just see it the more you see it. Okay. So some of you guys who trade Smog and understand like this is a change of character. Let's say there was a signal here. You're looking to get in a retrace here, right? It never retraces, right? For Smog. So you're just watching this thing trend. Now you normally would be waiting for a reversal long, but with GT, we don't have to. We can get in the trend, right? So we've got trending price action down. Here we have a fair value gap in the direction of the trend. Since we're bearish now, we want bearish fair value gaps, which we get. Here's a big bearish fair value gap. Price comes into the fair value gap here, but we don't enter on this candle because we didn't get a pullback signal yet. We didn't get an OG highlight. Okay, so we're waiting for an OG highlight. Here we get the OG highlight. Price comes into the fair value gap. We look for that first candle close in the direction of the trend. This is not an engulfing candle for those guys who know that, but it's not what we're looking for. We're looking for the first candle that closes in the direction of the trend. In this case, it's this one. We mark it in, stop beyond the candle that produced the continuation, and then we trail this thing down, right? In this case, we had kind of a weird price action here. Either close it here or close it above this candle for about, either way, it was like another 7R. ADX obviously above 20 at the time of entry, which is great. Bunch of examples here. Here's another one. Price is trending. We've got a fair value gap right here. Price comes down. I know we don't have the OG on this one. Actually, I don't want to show you guys that because I don't want to confuse people. How's that so far? Is that good so far? Kind of I don't see the chat. How's it looking, Craig?
It's great. It's clear. Honestly, it's just mostly just miscellaneous questions about like the course and sort of showing execution. There was one question on referring to Smog, so I don't want to jump the gun, but just talking about going over the Smog trailing stop loss process.
Yeah. Okay.
As an example. But yeah,
I've got a bar replay. Okay, good. I've got a great example here, bar replay. This was actually this morning. Some of you guys in Australia or London, you might have been able to take this trade. I was sleeping. And so that's okay. But let me share my trading view here. Okay. So this was at midnight my time. And so here we have a fair value gap. Okay. Let me pull this back a little bit. Okay. All right. So price is trending, right? Trending up. Here's our fair value gap. Here's our OG highlight. So we're on high alert here. We are now ready. So when you see this, if I was actively trading this, right, what would I do? We're trending. We're above 20. We're above 25 on ADX. We have a fair value gap. Tangibly, what I would do here practically is I would add an alert on this fair value gap if I wasn't just like watching it, right? Because I have everything I need now, except I need it to come into this fair value gap zone. Okay. So let's see this forward. Boom. There we go. So we're in the fair value gap. Okay. Now ADX is above 20. So we can take this trade. Now we actually, technically, according to the rules, could have got in on this candle right here, this bullish candle, because we look at this fair value gap. Okay. We're in the fair value gap. We reacted. There's our bullish candle. So we mark it in here and could put our stop loss under this candle. Now, some of you guys, you look at this and this is kind of scary because you're like, why don't we put it below here? Or why don't we put it, below the candle? And I get it. But when you look at all the trades that end up actually winning, it's okay. This is why this impacts our risk reward ratio so much. I mean, if we put it there just to the top high here, we have a 5 risk reward versus under a 3, right? So here we would actually look to get in the trade. Let's play this forward. Okay. You see it's respected, right? That's the point, is once we see a respected candle that continues in the direction of our trend after it's in the fair value gap, our thesis is it's gonna go, right? Sometimes it goes immediately and sometimes it doesn't. It takes a while. Here it took 4 or 5 candles and obviously it's gonna lose. Okay. I see John Monzo has his hand up. What's up, John?
Um, why not the fair value gaps above the one that you have marked out? Because
This
there's times where it goes into not that one. So after the signal, it's coming into the fair value gap that's 2 above that one. And then there's a bullish candle after that. That could have been a potential entry as well.
this one right here.
Yeah, so after the signal comes down, respects the gap, the next candle closes below that, but that falls into another gap below that one. Right. So I'm just to clarify why
Yeah,
are we
for sure.
picking certain gaps and not others? Yeah.
Yeah, for sure. Let's pull it back. Let's
Yeah.
pull it back. Okay. So this raises a good point. Appreciate the question.
Yeah.
All right, let's get rid of my fair value gap. So when we pull this up here, let's see. Let me check my Lux algo 0.02. So this is going with the same 0.02% threshold on the fair value gap. So when we look at this price action, this is the only fair value gap that we actually have to work with. That's why we're using it. But let's say that we had a fair value gap here. Let's say that this one actually measured it or clicked it on here. We'll see what happens here. So if this was a fair value gap that was part of it, we would wait for an OG highlight. We're in the fair value gap. It went away, so you got to be mindful of that. There's our OG highlight. So technically, if this was a fair value gap we were looking for, then this is our OG highlight. ADX is good. This is our first candle close bullish after the highlight. So we would technically be able to take a setup there. In this case, we didn't because it didn't register on our threshold.
So it's the threshold. Yeah.
In this situation, yeah, thank you. Yeah, and
Yeah.
yes, I did not talk about that, so thank you for that. And then if this did pull and we lost, okay, if it didn't, we lost, and then this is going all the way down, I would not take another long on this until I get another OG highlight, okay, which in this setup we didn't get another one. So basically it's one trade per signal, if you want to call it that, one trade per highlight, right? So now if this was a loss and then here we get another highlight after this, then by all means, take it. And we'll see, maybe we do. But as it is, the way that this price action and threshold worked out, this is the only one. So hopefully that's clear. Good question.
One last question. The ADX above 25 at what time? Because in this case, right at entry, they're both below 25.
Yeah, so that's why I said actually above 20.
20. Gotcha. All right.
Yeah, so
Gotcha.
25 is ADX for smog. It's
Gotcha.
easy to just do 25 for G2 as well. But going through the data of the things that we did, it could be 20. So
Gotcha.
And it's at the time of entry. So
Gotcha.
at the point of entry, we are above 20.
One more, sorry. So the 0.02 is for futures. Is there a good threshold for crypto? I'm just kind of playing into questions that are going to happen inevitably. at some point. Yeah.
Yeah, I can touch on the threshold for the fair value gaps. It changes as the price changes, obviously. So like,
Hmm.
um, as pairs get bigger, the percentages will change, vice versa. What I like to do, and like this is obviously going to change. Just who has look at Quinn motion, by the way. Sorry, look at his thing. He has like a cartoon graphic. It's crazy. That's sick Quinn motion. But for the fair value gaps on Sol, I started off at the 0.02, but then it would stop picking up the fair value gap. So what I do is I just sort of back it down threshold wise until it starts picking up. Like you don't want to see them sprinkled everywhere, but you don't want like obvious fair value gaps not showing up. So back down the threshold percentage until the noticeable fair value gaps are becoming present. I know it's not like a really refined number, but what I've noticed in like in general with everything that we're doing with trading is like this is also a reason why you should understand what you're trading. John always talks about like I don't have indicators with fair value gaps. I don't have indicators with break of structure, change of character because if it's happening, I'm seeing it and I'm aware of it. And so, I like to use the indicators, but also understand you have to put the reps in with these things to understand which fair value gaps you want to pay attention to and why. It shouldn't just be like, oh, the indicator said do it, so we have to default do it. Or the indicator didn't say there's a fair value gap here, so we're not going to take it. Like there's been moments where I'm trading smog on Sol, a fair value gap just doesn't print because it's like a hair off the threshold, but there's an underside retest, or it's into like previous resistance levels, or it's like a overall really good formation of price action. I'll take the trade and it will be a win. So like play around with the fair value gaps, see which fair value gaps are valid enough to pay attention to, and then set the threshold so that the indicator is representing the fair value gaps that you're looking at the chart at and saying this is something that I would want to tap into. And if you do that, then it's going to be good. I think us trying to find like this really granular deviation that's always adapting with price in different pairs is going to be like I don't know if it's necessarily like a productive way of looking at things. I guess so.
Yeah. No, I appreciate that. Thank you.
Yeah.
There is there is one thought too that we even explored. There's somebody I was partnering with and exploring this was a to take that threshold and have it be a scaling average to the overall average true range of the daily price, so that it could kind of move with that as the price moves, and then that was just becoming complicated. So because then again you're still trying to narrow in what is that percentage, and it would still be different on every pair. So I get it.
Yeah. Yeah, because it's I also toyed with that. I was like, wait a minute, I'm not getting any like fair value gaps populating on my chart as the prices change by a ton. And then I was like, well, where do we really go with that? And then I just started trading it, and I was like, you have to see them, and you have to like if the indicators should just be like a little aid. It shouldn't be like a only follow it type of thing.
Right.
So,
Good question. And obviously, it goes without saying that all strategies need to have context and directional bias and understanding, right? Like targets, bias, and context. Um, and I know John does a great job talking about that as well. You just did a top-down analysis training recently, and so understanding that. I'm going to dive back into this example. I saw a question about how to get these indicators. These are already linked in the Discord. If you go to the Discord and you go to Tools Exchange, the Tools Exchange channel, these are already linked there. I'll show you guys here. So right here in the Discord, there is IT Smog Oscillator and then IT Smog G2ADX. So go ahead and click those, add those to your chart. It's that easy, so you'll have it. Okay, let's go ahead and play this forward. So we can kind of answer that question about trailing stop loss. So we're going to go ahead and play this forward. Once we hit break of structure, we'll go ahead and move our stop loss to break even on here. And this is a candle close above, okay, or candle close below. This is a candle close break of structure, okay? I know I've seen, and I know Joe and his experience has seen as well, that we sometimes get these wicks that wick through the break structure and then come back down. We're looking for a candle close, okay? So in this case, we get a candle close right there. So we would be moving our stop loss to break even, okay? I see another hand raised. If you guys want to put your questions in the chat real quick, that way we can kind of get through this and then we'll address them. So this is where we put our stop loss. And then we would be able to continue to follow this as we continue to move forward. And so with the smog, we would go ahead and just like how we would trail with smog, we would trail fair value gaps. Not sure why I'm not getting, yeah, you can see it's really starting to run. So there's no fair value gap yet. So I don't know if that's a bar replay thing or, yeah, I'm going too fast. But yeah, so you can see there, that's a 5R just to break of structure. And then let's see what I would have done here. This candle right here, honestly, that's 0.02. That's a pretty massive candle. Probably would have put my stop loss under that candle and locked in this trade at about 4R, which would have been nice. Otherwise, looks like we still, if you didn't, we still have a ways to go to get there we go. There's that first official 0.02 fair value gap candle. So if you would have waited for that type of size of fair value gap here, then here we'd be locking in, it looks like 9R already. Waiting for that trend to continue to push up. And so that's what we do when we trail is we look for that fair value gap that prints nicely, and we put our candle, our stop loss below the candle that prints that. Okay, so here it is, we're trending. We have a fair value gap, we have a highlight. So this is interesting. So this is actually technically the stop loss on the trade, but we also have another trade showing up here. Okay, so we have an uptrend, we got an OG highlight, we've got a fair value gap, and we're coming down into this. So we'll see what happens. I would say if I was already in this trade, you could go and try to add another position. I don't have too much experience with that, so I would probably just stay in the position I have instead of trying to add to it. But we'll look and see here. So right here, we could be in this trade. This is actually another entry, right? OG highlight, ADX above, comes down into the fair value gap. This candle technically is our bullish candle. It closed bullish. It's not technically, it is technically a bullish candle. It's one of the least ones you want to see in this example, but it is technically it. And so if we went with it, we're good there. Let's say you missed it and you got in here, right? Anywhere in between here, because you are marketing in. So sometimes depending on how fast the price moves, you might not get filled exactly here. You might be somewhere in here. Okay. On futures, the liquidity and slippage is really not a problem. Crypto might be a different story. You see there, this setup is a loss. And then you see here, that was the stop loss on that setup. And so, yeah, that's basically it. Like I said, if you understand SMOG, you're going to be able to trade G2. You're going to understand it, right? We're going to put a lot more. I can't see you guys anywhere. See me?
Yeah, we can see you. There was also a question about ADX from Felix. This was the raised hand question. I think it's pretty good for everyone. With the ADX having to be above 20, are we talking about the 1 minute ADX for the G2 having to be above 20?
Yeah, we're talking about the 1 minute ADX above G2. And the 5 minute could be wherever. However, if the 5 minute is also above 20, the win rate does go up a little bit. So, which would make sense because you've got that directional value. So, yeah.
And then what about this might be exciting to sort of touch on too, like tested only on 1 minute, but like 15-second on the table potentially.
Yeah, so I mean, we've been fans of, or I should say, I have. You've always been like, well, I've been a fan of the 15-second. I know the original OG was created on the 15-second. Taking G2 to the 15-second is something that has already been done by none other than Anthony. He's not on mentoring today. Unfortunately, he's got a work meeting. If you guys don't know Anthony, he was recently given the role of moderator. He's also an analyst. He has funded so many accounts. I think I know for a fact he paid to bring his family to Disney World, and he paid for his daughter's private education, private schooling from his trading profits and from his funding accounts. And he just funded another account this past 2 days, trading G2 on the 15-second. That's all he did. He traded G2 on the 15-second, and he funded another account trading the NASDAQ in 2 days. So